Hello, everyone. Welcome back to the Prospero.Ai stock market live stream. Let's see some of those familiar names roll on in here. Be sure to like the video. I'm going to check where we're at right now in terms of subs on YouTube, but we are approaching 1,500. So you'll probably be hearing me say that a few times going forward in the streams as we approach that milestone. We're at 1478. So we are 22 subs away from hitting 1,500 on YouTube. So if you haven't done so yet, please do. And thank you. And right now, we will get into the topics. George will be joining us any moment and we'll discuss them in detail. But let me just run you through what we're going to be talking about today. Like always, we will be turning it over to the model portfolio update at the end of the stream. We are at a special time today. Happy Memorial Day, everyone. We pushed back the stream one day for when the market was open. But without further ado, we'll start with a normal market update in the beginning. I believe we have some cool insights that we saw on HubSpot within Prospero. We'll talk about them. And we'll cover NVIDIA's earnings report. Again, they just continue to impress. It's NVIDIA's stock market. We're all just trading in it. But we'll discuss them in detail and some of the crazy milestones that they're hitting themselves as they've just continued to rally for over a year now. We have GameStop round three. Probably not, but the stock was up 20% to open this morning. I'll tell you why, and we'll discuss if there's any potential in another meme stock rally or extended one. We have Apple iPhone units up 52% for the month of April. So very good data coming out of China for Apple. If you remember, if you're a normal viewer, we covered how they were discounting iPhones in China. So it seems like it worked. But we'll get George's view on what that means for them. We seem to have a bit of a, I don't want to say negative, but not so positive, I'll put it like that, view on Apple recently. Maybe they're going to change our tune now with this story, though. If you're a sports bettor, I hope you don't also invest in the stocks because they got some bad news today. A state is raising the tax on the profits that these companies are earning, and it hit the stocks pretty hard. I believe DraftKings was down 10% today already. We'll get more into that, what it means for these companies, their businesses. Maybe more states will look to increase the taxes on those profits as well, and we'll dive into that. And like always, we love to cover the world of AI, and it actually intersects today with another world we like to cover, which is the world of Elon Musk. He has his fingers in so many different business ventures. We have a story out of xAI, raising capital. They have a fresh new valuation. I'll fill you in on what that is later on in the stream. And we'll talk about xAI and what it means for Tesla and how those things come together. We have another AI story, but this one is about how AI will impact the business world going forward. We have a deep fake that truly affected a company. They lost $25 million. I'll tell you how, where it happened, and maybe how this is going to impact how business is done going forward if this tech is becoming too prevalent in the business world. And we have one final story that we'll get into before we flip it over to the model portfolio update, and that is the total global debt around the world. It is hundreds of trillions of dollars. I'll tell you just how much it is, and if it's actually a positive thing or a negative thing for the stock market. But that's all of our topics for today. So let's take a look at the QQQ and the SPY net option sentiment in Prospero. We have a pretty boring day so far, I would say. Up 0.2% in the QQQ. SPY is basically unchanged, and the Dow is slightly negative. But let's check it out in Prospero and see how these things are looking. Oh, and let me public service announcement right now we have 30 viewers in the stream, so good to see. If you guys have any questions that I didn't mention already, just feel free to comment them. We'll get into all of them. Hello, George. Welcome to the stream. Good to see you.
Morning.
Uh,
Did I time right? Where it looks like asking for questions. You were almost out of the intros.
Perfect timing. I promised the people a SPY and QQQ net option sentiment update, so let me give them that, and then we'll just roll right into the topics. We have the SPY at 41 currently, and we have the QQQ at 49. So QQQ pushing well above the SPY today so far, probably the NVIDIA effect we're seeing on the market. And that's kind of exactly where I want to start, George. Just, what we're seeing in the markets today. We had a nice holiday weekend. Happy Memorial Day, everyone. Pushed stream back a day. Markets were closed yesterday. But what are we seeing happening in the market today?
Well, the first thing I wanted to talk about is just a few interesting stories that we're seeing, and I think people kind of are curious. They ask me all the time, like, "What's your strategy?" And like overall, what should I do? And I think we talk about one of the things that we talk about is the difference between like our investing and trading strategy. And I think we have a really good example of how we think about risk in investing versus trading because it was a pretty big event that we're seeing today. And I want to talk about HubSpot, which I dropped yesterday in our investing portfolio. And I dropped it because the technicals had turned around on it. And that was a pretty, easy drop for me. Just because the way I think about risk in the investing, we also call it the high conviction portfolio, runs at about 5 to 15 stocks, where the trading portfolio runs at about, I would say, 60 to 150. I think I've seen it as high at. So we were actually holding 2 HubSpot positions that we didn't even think about closing in the higher risk portfolio because we saw it at, 95 to even 99 option sentiment. And that turned out to be right. That turned out to have more knowledge of the than the technicals. And that's what we talk about, the Prospero signals being options derived versus the technicals, which are just like price, which is kind of like more price derived and momentum factors and more linear equations that drive that. Whereas, one of the things we like about the options metrics is their nonlinear equations resting on basically where institutions are making their bets. They're using complex nonlinear equations and different data sets. So we're counting on their ability to look up information asymmetry when we kind of lean on the options metrics. But that's a really good example, and where it's just like the discipline of our strategy and the discipline between being, minimizing risk versus being more comfortable with risk. And HubSpot was something that, even though it was like what I said was an easy drop in terms of saying, well, it's not worth the risk. We have other tech plays. I'm going to keep the tech plays that have, these positive metrics like NVIDIA and SMCI that don't have the technicals turning around on them. So that's why it's an easy drop, but also not a home run. I was like, I like in the back of my head or even more towards the front, I would be like, well, that an option sentiment is much higher than we typically see it on HubSpot. So, there's something going on. There is this Google deal, and that's why it, kind of went up. But I think that that's a really good example of how we guide people, right? Because we have kind of a more risky, larger portfolio and a much less risky, shorter portfolio. And what I always tell people, what I always advise them is that those are just examples of how we would do a pure risk minimization play and a risk on play that's more signal driven, where we don't ask a lot of questions, don't do a lot of digging. We just say, here's what the signals are saying. We're just going to go with the signals. And we do it, people have seen it on the stream, sometimes very quickly to make those determinations based on the signals. So I think that that's a pretty important thing that I just wanted to identify off the top. There's our investing strategy, there's our trading strategy, and then what we recommend for people that follow us, which is to take what makes sense to them with those strategies, with the signals, and build something that works for them. And I just think that's super important right off the bat, because like some people might say, oh, is that a miss? And in my mind, there's no misses in which I follow the strategy. If I follow the strategy that works, if I follow my pre-prescribed process. The only miss in my mind is if I don't follow the process. and especially if I don't follow the process and it turns out to be the move. I could have made a more profitable move by following the process. And I experience this all the time. And I was even saying to Steven, he was like, you should share that. And I don't think this is notable, but it fits in well with the story. Is like I was deciding between LPL or EVTC. And they had very similar kind of performances, tech hedges. And I went with LPL, and that looks like the wrong choice. I was looking between Wendy's and what was the other one? Wendy's and I can look at it right here. Another consumer cyclical. I can look at it on my chart pretty quickly. Carter's, and Carter's is looking to be a little less performant than that today. And that's just one day, but that's an example where it's like these are tough calls that people are making all the time, which is why we advise on process, right? Because a process can be consistent, a process can be honed. If you're kind of just like applying what was right and what was wrong, sometimes it could be nonsensical. And on the shorter time scales you look at, it can be nonsensical. Like the other thing I'm not doing is I'm not saying like, oh, just because Wendy's is starting out worse during the week, I want to switch out Carter's for Wendy's. I want to stick with my decision. I want to see it play out because I went with the process. And that's why I think we really advise towards a process. One other thing, I don't think you mentioned it, Stephen, is we are doing a special Thursday night options training with a really sharp guy that I met through our partnership with Urban Finance, Eric Smolinski, ES Invest, and I'm pretty excited about it. He one of what I always say is why we invented net option sentiment is I got sick and you might say very frustrated trying to teach people how to read options chains. And Eric has really like slogged through, figured out how to do that, and is pretty patient. So Stephen, I don't know if I told you this yet. I just told you to join, but you are going to be the person that is learning options from Eric when he gives the 101. The idea is that you'll ask questions that someone that might be trying to learn options, because I don't think you trade options, right?
No, I do not. Not at all.
Great. I thought you'd be the perfect guinea pig. So yeah, like
Hmm.
I think that live stream is probably going to be Eric talking and Steven talking more. But if you're curious about how to learn kind of options basics, I think that's a great one because there's not many people that talk about options online that I like the way that they teach it. But Eric is he definitely is. The one message he has that I really agree with is that you do your own research. That I'm just teaching you tactics and things, and you got to kind of learn it for yourself. So I think that's going to be a pretty fun live stream. It's going to be later than I normally like to live stream, but I hope some people that might not be able to watch much of this, maybe during work hours, we'll catch you on that one.
Hmm. So one stock I definitely wanted to cover today. We were actually staying live late on Wednesday trying to get their earnings on our live stream. It was Nvidia, and we've seen a lot of things play out since then. So there, obviously, it was very positive. They crossed $1,100 today. They're now within 10% of passing Apple in market cap, 20% of passing Microsoft in market cap, which would make them the biggest company in the world. Um, is it fate? Is it destiny that Nvidia will pass them both? What reactions do you have now, a few days post their earnings for their company? Did you learn anything new, or is it just more of what you knew?
Some things I want to highlight. One of the things, I mean, I think this is why we really emphasize the guidance, and I think one of the reasons it did so well is I think as we talked about, the market was pricing in a beat. But I think one of the things that they also did so well was as they always do, they put a roadmap for a future, and they're calling themselves an AI product company now, and they're moving away from hardware, which is brilliant because I don't think that's a big reach considering what they've done. But B, I think if people ever criticize the multiples that they trade at, they say it's high for a hardware company. And we've highlighted that a lot of what makes them great is software and software embedded in the chips. So beyond that, but I do like them as an AI product company. And the other thing that they announced is, and it's kind of interesting for two factors, which is that they're going to make a new chip every year. And everybody is excited about the Blackwell. The Blackwell is supposed to be much more exciting than forgot the Hopper. Than the Hopper. I don't know. Maybe the more challenging thing is to figure out the names for these things every year. But they announced that, and I think that's huge because one of the things in terms of these speeds, like they're kind of figuring out how to do like the Apple thing that we sort of criticize only well. Like instead of planning obsolescence where like a battery breaks, I think for these companies that are just like chasing the fastest speeds they possibly can get, I think they've created a way to compel people to buy the fastest chips every year that they're making them. And I think if you're talking about when their revenue is going to slow down, I think that's a brilliant move on their part. Not only from a revenue perspective, from just figuring out a way to get more people to buy things on a year-to-year basis. I also think it's smart. We also talk about people trying to copy them, and the best way to stop people from copying you is to just continue to innovate, as we always say. But I think there's another important story where we talk about like, okay, these people making new chips, talking about the story around them and the way they're forecasted, and the way they get priced is a lot based on like growth beating expectations, as we just saw. So I think that's a big thing for them. If you want to say like, hey, how do you solve for the problem of Nvidia continuing to think that people will have like growth beating expectations, that's a great way to do it right there, continuing to come out with new chips. I'll be right back, Stephen. I can hear you though.
Okay, no problems. So I almost spun directly to this story after I heard you say nonsensical before, but I figured we got to get to Nvidia first. But here we are now. We have GameStop and the meme stock rally round 3 trying to get kickstarted today. GameStop opened up over 25%, I believe, this morning. It's kind of sold off a little bit throughout the day, so maybe it's not a round 3, but we'll get your opinion on that, George. Why is GameStop up so much today? I saw news that they raised $933 million and sold 45 million shares, which doesn't really align with the short squeeze, like lack of shares available of their float theory that kind of got them going. That's why I kind of spun it from the nonsensical. You also mentioned something about T+1, which I don't know much about, and our viewers probably don't either. So maybe if you explain that, it'd be good for all of us. But is the meme stock rally round 3 about to start, or is this short-lived, just this morning action we're seeing?
Yeah, I mean, I think the thing about it, like, and we can kind of go in order. Like, I think that what we see with these meme stocks is I think the best comparison is like an aftershock on an earthquake, where it's just like the first thing happens, and then we just kind of see it like reverberating like lower and lower. So I do think we keep it like, as these things go, we keep seeing them get like lower and lower. And the one thing that I said is like, I'm still pretty involved in the meme stock community because I was an AMC investor. And one of the things early on, and that like has never ended. So I have to like, I call it a cult that some people need to escape from sometimes. But in being in touch with that, I think you see these like, you see this ongoing like reason to want to invest and just like keep people in, because like people are so committed to it as a stock and so committed to the idea. And I think sometimes what I've seen with groups of people these days is they just want to be right so badly. They just like act like they're right. And they act like that was going to make them right. And I think that's a good way to lose money if you're talking about being an investor. But I think the interesting part about that, and we'll talk about T+1, and we'll talk about settlement, right? And what's weird is when you used to buy a stock, you used to actually get like a real stock certificate. And I think one of the legitimate complaints about like what people call about like hypothecating shares, which is like in these like short squeezes, things like that, you basically have it, I think, legitimate talk. I don't like to poo-poo everything. I think legitimate talk that people, issue more shorts than the float, because nobody's getting real stock certificates anymore. So when you put shares in the market, when you like hypothecate shares, which is just making like more, like, it's not like inventing shares. It's basically like issuing, like pretending you can sell short 5 to 1 on like one stock certificate, but pretending, that you have that position. So I think that that's a real thing. But basically, like, it would be a lot harder to do if there was like like instant electronic settlement, where you had to deliver like at least an electronic proof of ownership. And whether that's the actual like stock certificate becoming an e-stock certificate that could be distributed, some kind of exact reference number. that maybe not doesn't get followed that closely in some of these transactions, especially with known counterparties that banks, hedge funds that have been dealing with each other. They might not want to do that, but if that was a requirement and it all had to go through some clearinghouse with the actual stock certificate that could be monitored, I think that would be a pretty interesting. But again, I don't really see that happening, and a lot of people the difference between T+1, which is basically like you have 2 days to like settle the trade versus now 1 day. I don't think is that substantial, because I still don't think settlement is being done in the right way. So everybody getting exciting. Part of the reason is everybody says part of the narrative is like hedgies are fucked. FUKT is what's and it's just yeah, that's part of they think that they've got them regardless, and that it's just this rule or this thing, this catalyst that's going to finally make the meme stocks go to the moon. But the problem is, and I don't know why people keep pitching this, because we see big runs that are not as big as the original one. So you could call this still a reverberation from the original one. And the one really important thing that I want to say that I think is just horrific about the way these stocks are pitched. Whereas now we said, you have a short squeeze. And the problem is when people issue shares, there's nothing that kills a short squeeze more than dilution. Because if shares are becoming more and more hard to acquire because people are holding them acquired as short, right? The worst thing that you could do is flood it with new shares. So all these people that are bullish on GameStop and are just they try to twist a news event into being a positive one, where it's no, it's a fundamental play. It's GameStop isn't a fundamental play because they don't have a growing business. It's the same thing with AMC. If you're a fundamental play, you need to have some kind of fundamentals are built on the fundamentals of the stock. And the best thing these stocks have going for them is maybe they can survive, especially AMC, because it has a lot of debt, whereas GameStop doesn't have. But GameStop doesn't have a business. That's the problem. They're what are they? I think last time I checked, they were a 10 on the growth scale. 14 percentile on the growth scale. So that's the real problem with them. It doesn't matter that they're getting a little better, whatever. You need to have a real business with real growth prospects to be an attractive investment, and they don't have that. So you're just pretty much depending on these events. And if you're depending on the events, this is the logic puzzle that is difficult. If you're depending on the events, then you're depending on institutions, because institutions really need to be there to play the events. Retail cannot make an event happen on their own. We saw that definitively with the Prospero signals, where we saw options bets, on a lot of these meme stocks, heading really far up, leading into the event, which absolutely speaks to the idea that institutions were betting on these prior to and playing swing trades during. So yeah, I think that that's absolutely something that's an issue, and there's a lot of logic flaws when you look at this.
So at some point in your talking right there, George, your camera froze. I'm not sure if it's everybody for the stream or just me in StreamYard. I think it's frozen on everything, so I don't know if you want to stop the camera and restart it. I do have a follow-up for you on GameStop. Oh, it's back. It's blurry.
It's
It's
bad.
clearing up.
Yeah, I was just doing a speed test on my internet. I don't know what's happening with it today. Hold on. There's one thing that definitely has affected my speed at times. Can you hear me now?
Yeah, we can hear you. The camera's moving too. It's just blurry now.
All right, let's see if this helps. I'll just refresh. I'll be right back.
Okay, no problem. So we have 70 viewers in the stream right now between YouTube and Twitter. Like it up, folks, if you're liking the content that we've discussed so far today. Your camera is up. George, if you can hear me, I'm not sure if you can hear me anymore, but your camera was clearing up when you left, so I think it should be good. Let's see. Yeah, it's looking better now. Yep, back to perfect. Okay, to jump back in to the GameStop discussion. So you're kind of talking about the fundamentals and how there are none. that's kind of what I want to ask you about because it's like now they have almost $1 billion. Like as a company, they have to figure out a way to utilize that money to either reinvent themselves. You said they don't have a lot of debt, so I guess they can't like it wouldn't make sense to like pay their debt off. But like it's on GameStop now to try and make their company viable, right? With all that money they just raised.
Yeah, exactly. And I think that it's just like, I think that's what I'm saying. Like, you bet on a company as a fundamental play is if you have like solid evidence that their business will grow and be more profitable, or at least be spitting off a lot of profit. It's like GameStop is not profitable right now, and they're not really forecasted to be profitable. So it's like, before you bet on them, they need to solve that problem, right? Like, that's the big important thing that needs to happen. And that's why it's just like, they can't be a fundamental play. AMC can't be a fundamental play until it figures out what it's going to do, like with its shrinking business. And like, if it can drive more traffic to theaters, or if it can figure out a better way to monetize the square footage, like both of those companies need to solve that because it becomes before it becomes a fundamental play. But I think what I'm highlighting is like kind of even more damaging. And it's the idea that these people are so committed to GameStop, AMC, whatever, that they'll just like, whatever the news event is, they have to twist it into a positive event, even if like their short squeeze is kind of hurt by the idea of these new shares being issued, then they have to shift. And that's the most damaging part. Like, you have to be able to keep your investment thesis for it to be a solid investment thesis. And just, we haven't seen evidence of that.
All right, so we'll see what happens with GameStop throughout the rest of this week. We'll be back live tomorrow, so we'll see if anything happens. But spinning to Apple, we covered a story a few weeks ago about them offering a big discount. I think their biggest one of the year on iPhone units in China, and it looks like that discount has spurred some demand. Shipments for the Apple iPhone in China in April were up 52%. I would assume this is a very good sign because it shows that there's still hunger for their products. It's just maybe people seem to have jumped at the chance to get them a little bit cheaper. So, do you agree? It's a very good thing for Apple that that demand came through once they discounted their phones.
Yeah, yeah, I think I think that that speaks to. I mean, I think evidence of price sensitivity versus substitute goods, to use some of the pure economic terms, um, is kind of a very important thing to highlight. Just because um, when people have price sensitivity, you do have control of a business that might be, declining. And so that's good. I think that's a lot of comfort for Apple, because if the question was like, maybe people just started to prefer other goods and buy them versus, kind of like looking comparison shopping, I think is very, very good news for them, especially with like what we talk about all the time, their planned obsolescence. I think they're making some smart moves. With moving production to India, I think is very smart. I think some of this pricing things that they're doing is smart. But I do actually just think that they still need another product if they're going to be that exciting growth play. If they're going to get dollars away from Nvidia or SMCI, or the other plays.
And it's funny when you say they need another product. I feel like they're kind of hoping the VR headset is that product, but it seems like you wouldn't put it in that category right now, where it's like a game changing, the next level of growth for Apple.
I think the pricing is just too aggressive. That's the problem with it. Where it's just like, I think it's the same thing with MacBooks. If they could figure out a way to make those more price competitive, I think more people would buy them. And they're great computers, but they're just so expensive relative to PCs. And I think that like that's a big problem with like Apple growth products. And I think that's why when you see they're more affordable, like price points, like at lower things, like whether it be the phone or the watch, you see like much more adoptability to it. And I think people kind of have hard numbers with those, right? Because like people don't need a VR headset, like versus a computer where it's just like, yeah, like I've definitely, and I mean, if I didn't have my Excel problem, I wouldn't. But yeah, I think, yeah, especially those MacBooks last forever. But I think some people like even knowing MacBooks last forever, I think some people will still buy the computer that's like 50, like a PC that's 50% of the price, even if they have to buy two, because it's just less money up front now. And like that's a big bogey for some people with those Apple products. But yeah, I think it's just kind of all the same story, right? We're talking about like how impactful affordability has become.
Yes, and thanks, Joseph, for your comment. Yeah, I agree. As a MacBook user, they do last a while. I think I've had mine for like 6 or 7 years now. Spinning to sports betting stocks, which were hit hard this morning. Pretty surprising for me to see how much. I believe DraftKings was down over 10% off this news of Illinois. The senators from Illinois proposing a raise in the tax of sports gambling profits. So it would be a progressive tax that could go as high as 40%. And from when I was hearing about this morning, New York's tax rate is 51%. But these stocks were all hit just based off this Illinois news. But I guess investors in the market is kind of pricing in a scary reality that maybe other states will follow with this news.
Yeah, I mean, I think it's one of those things that um taxes are normally a scary thing for people, like for any the legislators doing it. But I think part of it is like, yeah, if it goes well and if there's not too much backlash for it, and I'm sure people that are watching this closely are monitoring that, like I think it could happen a lot more because states are always looking at more like things that are going to produce more revenue. And like, yeah, I think of all the businesses to target, like gambling businesses are probably an easy target for the voters where it's just like, hey, we got to get our tax revenue from somewhere, like might as well be these gambling sites. And I think what's interesting is like for a lot of businesses you're like, oh well, will they pass those taxes down to the users? But I think with gambling it's like people are so price sensitive, right? Like I think if fees, like gambling is supposed to be easy, right? If they had to make, if they up their fees, or god forbid there's like monthly fees to these gambling sites, I think you might see people leaving. So I think it's an interesting thing for it. But yeah, I mean, I think this gambling, like all of it, is just so new, and I think there's some interesting like kind of back and forth. Steve Cohen, we talk about Steve Cohen a lot on this stream. He had an interesting thing happen, I think, this morning where he's trying to get a casino built near Met Stadium, and it kind of goes to show you where it's just like I made the comment to someone where I was like, oh, I think Steve Cohen might not like it. I think he might be really good with stocks. And I was like, oh man, it's imminent that the Mets are going to be good. But I think he might not understand people as well as he understands stocks, or like treating them as like hard assets might be a mistake of his. Because like one of the things that like, obviously there's a lot of quid pro quo on Wall Street, but one of the things that like the local representative, I forget who, said when she was like, no, we're not going to review this casino that he's making, is because he was kind of like leveraging this like green space and like hotel complex, and he was going to say, well, if you give me the casino, I'll build this. And basically it seems like the representatives are drafting it without the casino but still building those. And it's kind of funny. I think like the comment I made is like, yeah, as a politician, I mean, as someone in the political sphere, you have to understand that you can't like leverage politicians like that, like especially when they have like when they could turn around and like lash you in public like this happened. Like I think you have to be smarter than that when you're dealing with politicians. Like you got to build the park first and then be like, oh, I've helped the community so much, can I have the casino now? Like if you keep them at arm's length and you try to be like, well, if you want this park, I'm going to build a casino, that's like not what works in the political arena at all. So I think it's kind of funny. I think Steve Cohen is like feeling his way around. I mean, I'd bet on him as an owner, as like figuring out this like political, like I'd bet on him figuring out, he's a very, very smart guy. But it's kind of funny when you kind of see him as like a fish out of water in these like new, like, relatively new arenas as a sports owner. That he's like, it kind of shows that everybody's got a learning curve for everything, including Steve Cohen.
Yep, my Mets have been nothing but a disappointment this year. So, Steve Cohen, if you are watching the stream, please focus on the team and not the casino. Please. That's all I want. Um, okay, so we
I
have
don't
an
think I'm there yet, but I'm expecting to hear from Steve Cohen at some point in my career because I talk about him enough.
yeah. Yeah, hopefully that'd be sick if we could get him on the stream. That would be a big milestone. Maybe one day.
Well,
Okay,
I
now
expect to hear from him as in he doesn't like me. not, not, hey, I want to come on your screen, your stream.
yeah, yeah, probably. That's probably the reality we're living in. But anyway, XAI. Okay, so we have some updates on them. They're like the AI arm of Twitter X, Elon Musk's AI baby. They have a new valuation at $24 billion after raising $6 billion in capital. And when this was announced this morning, actually, Nvidia stock it took it as positive because they were saying all of that money is probably going to go to buying Nvidia products. Um, but okay, so we have XAI private, 24 billion valuation. Are they the most underrated AI tech company in the world right now?
Well, I think part of what makes that so interesting is like how much of the AI of like Musk's AI ideas are going to go into XAI versus Tesla. Because I still think part of Tesla is going to be valued by their AI. But I mean, it's always interesting. Like something that could work out really well for both of them is if he builds XAI's, like if he builds that to be like kind of his AI hub, and then he like sells a license like relatively cheaply to Tesla, because then people are like, oh, we can have access to this like under market AI. The R&D costs don't have to be in Tesla, but they can still kind of get the benefits. I think that's a pretty interesting. Oh, I'm getting a message that the connection is unstable again. Let me know if I just type or text me if it cuts out. But I think that's going to be a very interesting thing for XAI as well as Tesla. Whereas, like, where are these ideas going? Because he's certainly threatening to put them both in places. Like, what's going on with his compensation package is certainly super interesting. But we're gonna have to keep that monitored.
Yeah, so that was I have a two-part follow-up for you. You just mentioned the compensation package. That announcement is going to be coming up soon. I think it's in the first week or two of June. So what do you expect for the stock to happen when that comes through? And then also, could you ever see XAI being acquired by Tesla, or is the relationship going to be how you were saying, where they're just going to, work together, but they'll never actually be incorporated together?
Yeah, I mean, I think we're talking about, shout out to last week's letter, a pretty binary event. When we talk about the compensation package, if he gets it, I think the stock is gonna go up, and if he doesn't, I think it's gonna be a pretty bad event. Um, but one of the things that um, one of the things that I think is pretty interesting about that is that also might get challenged in the courts again. So I think if you're gonna play it, I think it's kind of bearish on a high level until like it goes through the courts again, potentially, or people wait to see if it's challenged by the courts, because the upside on like, oh, he's gonna get the package might not be all the way there until people see that it gets through the courts. Whereas I think if he doesn't get it, it's going to be a very bearish event. So I think if you're playing it, you're tilting it bearish, but Tesla's starting to like do better in net option sentiment again. I think we might start to see some perception that it has a value. But there's just like the problem with Tesla, and we say it on an ongoing basis, is like these events are just too hard to play. Like that one is too hard to play just because of all the things we said. The courts have something and to play about it. Anytime like the courts could get involved, could not get involved, there's like a potential location change, like all of that is just like very, very hard to odds make and not something that everyday retail investors should be betting on. So I think betting on Tesla is betting on that event in some fashion. Um, so I think there's that. Um, but I also think like some of these other like events, like with the charging stations, right? Where he fired everybody at the charging stations, and people said that that's on that team, and people said that's going to be a mistake, and people are going to be like hiring back, and you just heard like I think one of their senior product guys at Tesla say that like left and publicly left a letter being like Tesla's not the same. So there's all these just like there's a story that Tesla's peaked. And there's a story that Tesla still got way more growth to do and it's undervalued. And what story is the right one? I don't know, which is why I will not play it until further notice, because I just think that story is too cloudy. And anyone that thinks that, like, anyone that thinks they have a handle on that, I just think doesn't really know what they're talking about or is comfortable with like a lot more risk than I would advise.
So there's with this AI technology, there's so much talk about how it being like a double-edged sword, and we have a negative story. You know, we kind of just barely touched on deepfakes, one of our most recent streams, but this is a story of a deepfake actually occurring in the real world and affecting a company. So a Hong Kong finance worker got duped into transferring $25 million to a fraudster that had deepfaked their chief financial officer. Uh, so as AI tech becomes better and better, and deepfakes are become well, if they become more prevalent, you know, it got me thinking: are companies going to have to change the way they do business and handle things in person in the physical world? Anti-tech, anti-digital. Could you ever see that happening going forward? It's kind of funny. It's like that complete opposite of the way things seem to be working. But what do you make of that?
Yeah, I mean, I think it's funny. Like the first thing that comes to mind actually is I think a big thing is, these people that are getting duped. I think the idea, and there was another story like on John Oliver's like pig butchering thing, which is basically people like that are like getting you on developing text relationships with you when they're not real people, which is another big thing. And like what there was like a guy at a bank that actually transferred like bank funds. He was a very senior person. And like I think the big thing is like I think people tend to want, like a lot of times in business, make like the safe pick, but like the safe pick, I don't think is necessarily like the sharpest people. And like, I think that you got to be at this point, I think you got to be pretty dumb. Sorry, people that are getting like pig butchered or whatever, like to have that happen. So I think executives are going to have like, who you make an executive, like the safe pick might not be safe anymore. And I think that's really interesting about like, and I think that's about risk coming to you, right? Because I think part of the thing about the safe pick is like, yeah, they're just gonna like, like push pencils around is like an old expression, but just kind of like sit in their office, not do much, not rattle the boat too much, just like keep the status quo. But now in this new world where like people can be targeted and risks find you, then those people that are kind of like safe, maybe not the sharpest, maybe not people that like think things through versus just like push things along. It might kind of change the executive profile that people look for. I think that that's a big change, but like, yeah, I don't think the world is ready for deepfakes. And the big thing that we talked about is I think it's in the political arena. I think it's only a matter of time. And I think part of like what needs to be solved is I think we've gotten too comfortable with like kind of like fighting dirty and like taking politicians and their families to courts and like, I believe in the letter of the law, but it seems targeted now. It seems like who's ever in power ends up going after like their enemies or their predecessors or their families. And it's just like, I don't think that that's a good trend. And like all this, like, I think that's part of like a fighting dirty trend where it's like, I would not put it past any of these political parties to use deep fakes to send messages of their opponents or things like that, have them like saying what they're doing. And I think that's especially dangerous because when that kind of activity, and we're starting to see it, gives cover to like foreign entities, right? Since we have political parties that are like sending hate messages against each other and are kind of like string each other up on the extremes, like I think we've made a friendlier place for like Russian and Chinese bots with like similar messages that can like get away with that stuff. Whereas like in the past, we could have been like, oh, if someone's doing that, it's foreign entities. But now it's kind of harder to tell the difference between foreign entities and political parties like targeting each other. And I think that that's a very dangerous trend. That I think a lot of what my problems are, and like I was on a panel like about I think 8 months ago now with an ex CTO of the United States, and one of the things that just like really bothered me was the way he talked about like AI or like things like that we're talking about here, like everything that was like some kind of catastrophe, like you might say impersonating politicians or AI taking over, things like that, all of that was just grouped into like one category and it was called X risk. So X risk was existential risk, shortened to X. And I actually had an inherent problem with that right there. It was like, oh, like you're trivializing these risks so much that you can't even like say the whole word and you're just like bucketing all them together. That's how little the government wants to care about any of this stuff. They just want to throw it all into this one category and just basically say like, well, we don't want to care about those things because they might stifle growth. And that's like, I think, a very scary, like high level way that the American government seems to be treating this kind of stuff. And I didn't need him to say that for me to be like, it looks like they're treating it that way. But like sometimes when things confirm what you already like know, and you're hearing it like straight from the horse's mouth, not some like random thread on Reddit, which I like caution you people to be like, hey, I saw the due diligence on Reddit, and that makes it the truth. No, I'm talking about when you talk to a source like the ex-CTO of the United States, and they say that, that's a good way to confirm your beliefs. A source, and a real source. But yeah, I would say that there's like a lot of like, I think the scariest part is just the lack of preparation. And we saw the same thing with COVID, where we saw like people, or pandemics, where we saw people for years being like, hey, I don't think we're paying attention to this enough. Like at the CDC, places like that, there's a huge paper trail of that. And then it being like much worse of a problem than it needed to be. And I think we're probably facing this with like a lot of tech stuff. Like government doesn't want to deal with X risk until it's there, and then they're going to want to deal with it, because they'll have to, and there'll be like huge like problems. And I think that that's a big problem with how things are dealt with these days, which is just like people don't deal with things in a preventative way. They only deal with things in a oh shit, it's already at our doorstep kind of like we have to like basically see the impact. And that's just like a really shitty way of approaching problems. Like, oh, we're gonna wait until it's like a big real problem before we even address it at all.
That must be a defect of human nature, I feel like, because it happens, within all levels and of society and everyone. So uh, it's going to be something we're going to keep struggling with, probably, because I have another story that's going to hit on that point. But before we get into it, I want to cover Gabe Carlson's question because he's asking about CELH stock getting hammered today. He says, any thoughts on it? Maybe we could check it out and give him some perspective.
Yeah, I mean, we were seeing that option sentiment like find lower lows heading in today. It really dropped a lot at open. Obviously, social sentiment is down. But yeah, I mean, I think one of the things when you look at this is um, lower profitability stocks uh, are, I think, something that in this kind of growth centered stock market, like you can see these events happen a lot. I will say it does look like there was a bit of a precursor to it on net option sentiment, just starting to drop. We saw kind of um, the low being 77 on May 17th, and then May 21st 73, May 20 yeah, and then it got even lower on May 21st 71. Then we see by May 23rd at 68. So like, yeah, that's a pretty big difference between a high on May 20th of 81 to a new low on May 23rd of 68. And that's kind of like orders of magnitude down from 80, like, getting into like a clear bull zone to a more neutral level. So I think, there was some things like I see a 68 on a stock like CELH, and that would probably make me pretty nervous. That would make me thinking about selling. So I do think we had a bit of a warning there, but I think like, yeah, in terms of like what's happening, is it safe if I'm in it? I think, it's not as safe as some other stocks. And what we've been saying more and more, and we talked about Dell on a Twitter Spaces today, or I should say I don't know if that's we, if it's just me. One of the things about Dell is that we were seeing it, and like its revenue growth has not been that great. And that's kind of a different point. I think unless you have like, when you're sitting on companies like Nvidia and SMCI that has huge growth, huge profitability, it gets a little harder when you have these companies like CLH with weaker growth, like at 46 profitability, sorry, weaker profitability at 46, and then other companies like Dell with weaker growth at 56. I think you see those, easier targets if there starts to be what should be expected corrections in the market, and we're hitting new all-time highs. So I think it's just it's just that, like, as a long-term play, CELH is still a good, not great pick. And I think we have one position in our trading portfolio now, like which is, I don't know if it's open right now. We kind of get in and out of that stock. But I think that's something, to watch for in terms of things where it's just like, okay, if the market does start facing problems, how much security do I have? And I think if you see either of those numbers, profitability of growth or growth below 60, you don't have as much insulation if the market starts to turn on either profitability or growth companies. Sometimes if you don't have both, you don't have that same kind of insulation. So I think that's just something that you have to monitor when the market's at all-time highs. And when we kind of pointed out, or what we pointed out in our newsletter this week, which is that Buffett's got his biggest, not only are we at our all-time highs, but Buffett is in his biggest cash position ever, which are kind of, the way we treat it. And I mentioned this to someone who I'm like training, learn how to invest, that I'm playing this like a bull market that I don't totally trust, like a bull market that could start turning into a bear market very quickly. So I want to stay pretty equal long short. I want to make sure I've got enough risk on that I'm capitalizing on the bullishness. But that I don't necessarily trust that to maintain. And I want to make sure if there's a quick turn, I'm positioned to not get hurt too much. Like I'm not necessarily positioned to profit off a market turn right now. You can't really be in a position to profit off a bull and a bear market at the same time. You have to be like incredibly well hedged. And I do kind of like to hedge enough where I'm definitely not getting hurt too much, but profitable on the bull side. But I'm just kind of trying to protect my downside because I do think it could turn at any moment. And if it does turn, I think stocks that don't have the solid profitability and growth, those could be targets.
So we did have the camera freeze up again right at the end of that. So you were good for all of that, and we can still hear you right now. I have one more topic. I don't know if you want to switch over and then do it on the other side, or if you want to mess with the camera right now and stay
Well,
right
is it
here.
better or no?
No, it's still frozen.
All right, I'm just going to switch, and then you can give me the topic.
Okay, so we'll see you in your laboratory. It'll just be me and you chat for the minute or two that George is switching over. We'll cover one more topic, and then we'll do the model portfolio update. As always, when George is doing the change, I'll update you on the market. So we're seeing the QQQ staying as the best performer of the indexes today, up 0.28% right now. SPY is still almost unchanged, and Dow is still slightly negative. Let's see if anything has changed in Prospero since we began the stream for net options sentiment. We have the QQQ at 49, which I believe is the same as before, if I'm not mistaken. Ooh, but the SPY is at 33 right now. So that's something to note. We're seeing a continued separation in net option sentiment for the SPY and the QQQ. That'll be interesting to see how George reacts to that when he does his update. Like I said, we have one more topic before George starts managing the portfolio. So if you guys have any questions, I would say start typing them right now. We do cover questions while he's managing the portfolio, but it's a little bit tougher since he's been occupied. So get those comments typed out, and we'll try to cover everything. I see Caesar just commented something. When George joins back in, we'll get to your question. Let's see what it's about. Any thoughts on snow? Stock went up when reported, then it declined. Yeah, that's an interesting dynamic we're seeing with snow stock. So we'll cover that. Let's check out how it's looking in Prospero. At least I could give you that information for now. So snow stock, net options sentiment time series graph, we're seeing it decline, which is usually a bear sign. It was at the upper 90s, 97, 96, all last week, and it's down to 84 currently, and it was at 87 this morning. So we're seeing that decline. Upside breakout is only at 53. Downside breakout is at 41. We like to see upside breakout at least 20 points higher than downside if we're going to be bullish on a stock. So that's not necessarily a bullish sign. Growth 72, upside 53, combine that 120. I think that's decent, but profitability only 40. You might want to see that be a little bit higher. We have George back in here now. Someone was asking about Snow. I was just taking through the Prospero signals for them. We're seeing a decline in the time series graph for net option sentiment. Upside breakout 53, downside 41, so not too much separation there.
Yeah, I mean, I think it's kind of what we were just talking about, and I think especially with Snow, like I just feel like there's an issue with, kind of. I kind of relate it to like where we are with like Nvidia and SMCI and like high growth, high profitability companies, um, with something like, even a small cap. It's just like Snow is just not quite there on profitability yet. Like they're on a 43 on our profitability rating, even though they're 72 growth, right? So the growth is below Nvidia and SMCI, like despite the much bigger profitability. So I just don't think you're getting a lot of your bang for your buck with Snow, and you see that play out in like the upside and downside. There's just not aggressive long-term options bets against it, because like why would you bet on that when you could bet on a company that is growing and just more profitable and is a safer company now? Like I think that's just like what you're up against until these like huge like chip companies that are just like much also very related to AI demand. Snow is related to AI demand, but it's just not throwing off as much profit. It's not, the margins are not the same. You're not really a reason to be in that. And it's the same. We said it with Dell, which does look better in the signals. I still wouldn't really own it relative to these other stocks that are just like more profitable and growing. Even Meta's in a bit of a slump. Google's in a bit of a slump. We haven't been adding them as much. I mean, HubSpot would be a big acquisition, but even those companies, I just feel are just like, the Magnificent Seven are just like much stronger plays because of the rates that they're growing right now. Versus something like Snowflake, where it's like, yeah, it's like growing faster than some of the Magnificent Seven or some of the names that I've named. But you're not getting that profitability alongside it, which like we're talking about, if there's any, like if there's any trouble with the market, even if there's corrections, those stocks that are higher profitability are just not going to get hit as hard.
Hope that answers your question, Caesar. Like I said before, we do have one more topic, but I was thinking now, I think this topic is very interesting and make a very good short. Maybe we should save it. We're going to be back live tomorrow. We'll have the good camera. I don't know what are your thoughts on that, George, but yeah, either way, we could do it.
I think saving it is fine. Let me start
Okay.
to spin up.
So everybody, you'll have to tune back in tomorrow to get that topic. It's very interesting, and I think on the surface level, you might think one thing, but when you dive deeper, maybe there's another truth to it. So we'll lead off the stream with that. So tomorrow at 3 p.m. we'll be back live. So you guys will have to tune in.
Yeah, now I'm like, what is that? It sounds interesting. All right, let's get everything going here. Just pulling everything up. Getting this ready.
I don't know if you heard, I don't think you heard me, but when I looked at SPY and QQQ when you were doing the transfer, SPY was at 33 in net options and QQQ was at 49. So
Wow.
That's one of the bigger separations I've seen. Maybe it's just
I mean, that's
moment,
like that's like getting back to the old days. That's how it used to be. Like SPY was much lower. It's only been recently. Okay. I think I'm almost ready to spin this up. I just want to get the right draft here. All right. We are almost ready. To share our screen. Okay. Here we go. I keep trying to like talk over this, but it's not it's not yet worked very well for me. All right.
Yeah, it's tough because you're actually, doing stuff.
As of this, I don't know if to me just like there are people that are just like comment if you're listening and not watching, because it might just make sense for you to read what I'm writing, Stephen. We can multitask.
Yeah, let's see in the comments.
Sounds like you don't want to read what I'm writing.
Yeah, well, if people are watching, I don't know if that comment either way. If you're watching and you want me to read it, comment that. Maybe it would be redundant if you're watching. I don't know. What are our thoughts from our viewers right now?
Okay, let's see what's going on with sectors. Oh, healthcare is continuing that trend. I think we're definitely going to look for a healthcare short. Healthcare short. Anything else? Healthcare, maybe industrials, consumer defensive. We highlighted consumer defensive as being something that has lost a bit of momentum. Oh, look at that. Large cap growth continues. Which is interesting. Large cap value is on the other end there. Let's see. Oh, I think Vive is healthcare. I think we probably want to drop it. I don't like shorting Fizz, only because I think it's got a fun name. Okay, is UNH. I want to see if we're looking similar on the chart. I'm definitely getting rid of Vive because I want to go more short healthcare, but it might be one of those things that by the time I'm short, it's correcting. Yeah, how about we'll keep UNH for now. We'll have our eye on it. Oh, I was worried I had SRPT. I didn't know if I did. It's having a horrible day. We might just hold on for the correction there. Melly, LRCX, LLY. Oh, I'm glad we kept two of those HubSpot ones. Yeah, CLH is getting destroyed. Coop and CRM. It's copper. I'll hold on to that. Can you tell me the net option sentiment trend on Coop, though?
So the Coop trend is slightly upward. We're seeing actually the live net option sentiment is at 51, which is at the lows. The trend looks slightly upward, but live look is a bit lower.
Okay, yeah. Getting rid of Coop. I think CRM. coin and 100 in option sentiment. I think we'll add another coin. All right, everything looks good here. Oh, except we're going to get rid of CRM and Coop. All right, let's see on the short side. ZI. Time to get out of ZI. What about LYB? Oh, yeah. Can you tell me about BXP's net option sentiment trend?
BXP, very volatile trend, hits the lows of like upper 20s and highs of high 60s throughout it. It's at 59 right now.
We're just going to risk control. Close these out so we can open some new ones. ARLP. Can you talk to me about the net option sentiment trend there?
ARLP is in an upward trend, but it's only at a net option sentiment of 37, but it is clearly uptrending.
Get rid of that. Okay, I think that should be all set. I want to look at anything else. FRHC. Isn't as solid as it once was. Rackspace. Like we're keeping some of these tech hedges. God, some of these like things are just so up and down. Oh, I thought I closed one of the HCP ones. I'm gonna leave this. All right, I think that's all there. I think I like everything else that I'm seeing. Oh, can you talk to me about the Whirlpool net option sentiment trend?
Whirlpool is at 41 currently. It's hitting lower highs, but the same low. Tough trend to read. Pretty neutral.
I think I want to get out. Okay. Okay. Now we can get our little portfolio thing. Sometimes I forget. Oh, all right. Well, that hasn't happened in a long time. That move. All right. Nothing here. Then we want to grab this. Well, I think I'll be right back. I think I just heard my refrigerator beep because I was getting tea quickly and got the freezer. Hold on 1 second.
No problem at all. Let's check on the comments. Oh, we have one on Twitter from Barbara. We can't see it clearly. Oh, so Barbara wants me to read when George is typing. All right. If there's something I can narrate and add, I will from now on, Barbara, for you.
If there wasn't, there wasn't open. I don't know what that beep was. Just a mystery. Home stretch. Did I do that right? All right, so we're going to hide this on the long side. Oops, I stopped sharing. I gotta get back into that screen. I found it. I lost the StreamYard stream window. Okay. It has got that high short pressure. Damn, NVIDIA short pressure is up to 87.
Does that concern you?
I mean, maybe. I'd have to think about that more. It's a possibility. What's going on with SRPT? Can you talk to me about the S&P net option sentiment trend?
SRPT is at 89 right now, but the trend is declining from 100 at the beginning. It was as low as 85 recently.
I don't know if I want to add more. No, I don't think I want to catch the falling knife. Okay, what do I want to do here? All right, I think I'm going to grab these. How many mellies do we have open?
Melly, I think all are closed. Oh, wait, no, now it's loading in. Okay, never mind. Let me see.
Here, I actually just.
I only see one open.
Okay. It's weird because we have all these industrial stocks on here, but industrials aren't performing well. Maybe they're getting closer to the bottom. I think I'm going to grab another Dell when I said it wasn't good enough, it was in my lower conviction portfolio. Obviously, I have a lot more positions in this one. I think we probably want another Apple. How many NVIDIAs? I don't know if I want to add more risk actually. All right, 1, 2, 3, 4, 5. That's good. All right, and then we're gonna go here. Oops. On high, and we want healthcare, industrials, and consumer defense. I think this is like very. I don't want to do this. This is too. I want some new names. I just got burned on this recently. I'm not. Actually. I might have to go more. I want to filter. On market cap. Bear with me, everyone. I want to do 1 billion. And then we're going to do. And also, I just want to see. Oh, I keep doing that. All right. So we want this to be. We want the 0. We want the zeros, not the ones. Okay. And we 18 of these. I'm just filtering for market cap because I don't like the instability of lower market caps these days. I play them more if I'm. What happened here? Almost got that right. All right. Now we gotta look. I think. Do we have a PINC open?
We do.
Okay. That's all I need for that. All right. Let's do it. What's up? Not the right healthcare ones, apparently. I think we have a column open, right? It doesn't matter. It's not. We don't like it anyway. God, apparently, even though healthcare is getting, let's check out flow. Flow is another one that we always just seem to time wrong. Oh God, I had a potential option to add this weekend. Although Fizz, the other one that I did add, ended up being a good add. No complaints. We already have algorithms, I know. Oh, here we go. ILMN. Can you talk to me about ILMN? Actually, I'm just going to look at it. On Prospero. I might add it to my high conviction portfolio live. It's got that right trend. Its upside is higher than downside, which is what's giving me pause. But it's a good way to maybe ride this potential healthcare thing down. I'm definitely going to add it here for now. Sorry, I'm just looking. I'm just looking on Prospero. I do really like the net option sentiment trend on Prospero. But I don't know if I want to add it. All right, I'm just going to come back to it later. Industrial. Stericycle is doing well. Oh, we don't. AMN. Personnel services. Oh, this looks very interesting as well. All right, EL. This is a new one we haven't seen. Oh, Estee Lauder. And doing better than some of the other consumer defensives. THS. No, not the right one. NVST. It always amazes me how many companies, health technology, exist that I've never heard of. 4 hour. Yeah, this is interesting. I'm looking at NVST on Prospero. NVST looks very compelling. I don't know why it's rated above ILMN. Oh, I guess they're all pretty well packed. What is it? What's grading it down? ILMN, just a very, very low net option sentiment. That's what was. But I like the setup. I might like the setup better on NVST. Okay, MIDD. Another company I've never heard of before. I don't like that 15-minute trend. CTLT. Looks like another contender. got some new bears here. A little stronger than the other ones. Okay. Now we're going to paste. We want to do like a 12:30 send on this. All right. So we have that's done. That's done. We're going to push send on that exactly at 12:30. So we have 2 minutes. I want to look at NVST. Price target's around where it is right now. I'm going to see if LIMN. I just had some big candles up. Good thing I didn't enter it. Average price target on ILMN is 150 versus 104 where it's trading. So NVST looks better from that perspective. But I'm also going to look at CTLT, which I think I've been in before. Yeah, that is on institutional exits, looking like a lot better. Its price target is pretty close. CTLT might end up being the pharma one. When does it report? That I think is the safest one. All right, about to press send on this. Any other questions?
No questions that are new. Just FYI for everybody in the stream. Obviously, it's Tuesday now, not a normal one-day stream, so we'll be back again tomorrow. So you don't have to wait a couple days for us. We'll be back again.
All right, 12:30, sending this out. And I think we'll call it there, Stephen.
Yeah, with that, we'll end the stream. Thank you, everybody, for tuning in. We will see you tomorrow. Thank you, Joseph, for being here. Bye, everyone.